Good afternoon, investors. Welcome to our April 5th, 2023 edition of Bull Sessions. My name is Mark Robertson. I am founder and managing partner of Manifest Investing. We've been doing these Tuesday afternoon sessions. They're generally on Tuesdays. Today we did slip to Wednesday, but generally on Tuesdays at 2 for the last couple of years, and just had a fair amount of fun and entertainment, and we've learned a few things along the way as we do these. I'm joined by Ken Kavula, dear friend who's been investing for a long time. I'm not going to say he's old, but he's.
My hand looks really different on this cover screen here, Mark, I'll tell you.
Yeah, that doesn't look like your hand, does it? But you can be accused of being professorial.
Okay.
And that, I mean that in a very respectful way. Much like Robin Williams. I really love Robin Williams and Dead Poet Society, and that's what the picture is from. And yeah, that's me standing on the deck along with the students on the desk, I should say. But again, that's just Robin Williams encouraging the students in his class to see from a different perspective.
That's you with about a 24-inch waist, isn't it, Mark?
I think I was born with a 24-inch waist. Probably closer to 32 minimum. But good stuff. We're also joined by Matt Spielman, just out of Houston. Good afternoon, Matt.
Good afternoon, Mark.
Matt has quite a track record in the investing world. For those of you who are fans of the Manifest Investing Forum, he keeps us entertained and informed on the forum about all kinds of things. I thought about you a lot yesterday, Matt, as I was watching the airlines take care of their aircraft.
Yeah, that's the Wall Street Journal just had something today about Russia starting to feel the pinch of having flown planes trying to keep things normal but running out of parts. So they're thinking about it too.
Yeah, I think we had a part issue and we had a crew not show up and some storms. Traveling these days can be quite the adventure, and we certainly experienced many different forms of adventure. But I had a great.
I experienced a severe sense of deja vu yesterday, thinking back to watching the Bronco ride through the streets of Los Angeles when I was watching the coverage of Mr. Trump riding through the streets of New York. Boy, they were fascinated with that car convoy, I'll tell you.
Well, thankfully I missed that, so I don't think I missed anything. Good stuff. And then also joining us unofficially is Sean Mace, also in the back room. So many of you recognize the name Sean. Good afternoon, sir. He's probably muted.
Oh, yeah. Yep. Good afternoon there, guys. I'm enjoying my Tesla today. Nice and sunny out.
He's sneaking out. He's taking a break and sneaking out and joining us. All right, so we're going to do a couple things here today. Did want to point out that we are within 1 or 2 subscribers of 1,000 on YouTube, Ken. So
all right,
that will kick us into a new gear or something here shortly.
Let's send a pleading membership to those of you in the audience today that if you haven't subscribed to our YouTube channel, please go in and just click subscribe. It won't give you a lot of mail. It won't give you a lot of stuff. It will tell you each time we add something to the channel. And the channel is Manifest Investing Roundtable. I think you can probably reach it just by putting in Manifest Investing, right, Mark?
Yep, right on youtube.com, and you'll find it. And that's where we'll show a slide later, but we have over 350 videos there, including all the roundtables, all the bull sessions, and a few educational special sessions that are in there. The COVID cancellation conferences are all there. So if you want to go back.
Why don't you lay out, Mark, what we get if we get over 1,000 subscribers?
Well, I'm not sure yet what it does. It does give us access to a new set of tools. We might actually go live and put our faces, which are good for radio, on the screen. We'll just be doing some different things.
Okay.
I have a face for radio. Everybody else is okay, but we'll see how that goes. But yeah, it does give us some opportunities to do things and maybe offset any temptation to raise prices on subscriptions and all that kind of stuff, because we will have a small revenue stream from that also. So Ken, you and I will officially be employees of Google.
Oh, just what I need at my age. Okay.
in a strange sort of way. So anyhow, we've asked Matt to join us here today. We're going to, again, a week from yesterday, next Tuesday, we are going to do the dual book review on the Annie Duke and Joel Tillinghast book. We'll talk about it here in a few minutes. And Matt's going to give you some things to scratch your head for the next 5 or 6 days as you prepare for that. Did want to share a little update on Tin Cup. Again, another month has rolled in. So we'll do a little bit of shopping, and let's take it from there. Anything else you want to add?
Len is just letting us know that Sharon Saris, a Better Investing board member from Northwest Ohio and a member of the BI Brighton Investment Club, was making all of its members sign up for our web channel there. So that, thank you, Sharon. Thank you a lot. And thanks for the info, Len. We appreciate it.
Yeah, we do appreciate it. I spent Saturday morning with a bunch of very enthusiastic Space Coast and Northern Florida investors, and that was a good time. All right, here's the disclaimer.
I got a report on that session from Herb, and he said that you were doing outstanding work, Mark. I don't know whether he thinks I'd give you a report card or something, but you know.
I was fairly well behaved, I thought.
All right.
Pretty good feedback. Some of that same content that we used with the American Association, and we did have a couple of educators, professional educators in the crowd that wrote to me, and they were quite impacted by some of the case studies and just down to earth reality. You know, the no fear type mentality. So,
Mark, we're getting a note from Cheryl. She wants to know, has Hugh been held up? He had kind of promised at the last roundtable that he would be at this bull session to talk about Immunogen.
Yeah, and that's our fault, or you can blame it on the vagaries of travel again. He would have been available yesterday. He's not available today, but he has promised to either do it probably not next Tuesday, but the following Tuesday after that.
Wonderful. Cheryl,
Yeah.
put it on your calendar. 13 days from today, Cheryl.
Yeah, and he's still collecting up some ammunition there. In fact, he's in a meeting that's probably related right now. So could be
And
interesting.
I think Cheryl, besides Immunogen, he's also going to talk about Regeneron. Regeneron was the company that originated the discussion recently, and he's going to make sure that he gives us the lowdown on Regeneron as well.
Absolutely. All right, so here's just basically the standard disclaimer. This is about education. Everything that we do here is for illustration, basically laying out lessons learned over 8 decades by the modern investment club movement. So you're going to hear our opinions about how those policies, procedures, and methods all kind of come together to build better portfolios and take care of them. Our model, much like Better Investing's motto, is to simply buy better companies at better prices and hold them for as long as it makes sense to do so. And that's basically the nutshell version of our portfolio design and management and the discovery of stocks. We will talk about specific stocks here today in case studies. If we own them, we will disclose that we own them. We do a monthly roundtable. We are just coming off of our most recent March roundtable, where I submitted 2 stocks in a field of 5 and still ended up 4th and 5th. So I'm going to have to modify that strategy in the future. But what it is basically the sharing of 3 or 4 actionable investment ideas for further study and consideration. And we've been doing that since 2010. Our internal rate of return for a tracking portfolio is about 15%. So we think we have actually shared a few fairly decent ideas. And we do it every month, generally the last Tuesday of the months at 8:30 Eastern Time. If you'd like to be added to a reminder about that particular event, send an email to nkavula1@comcast.net. For anything else, questions, requests for slides, suggestions for future topics, our 2 email addresses are right there in front of you at the bottom of the page. All right. I couldn't resist a Joel Tillinghast quote, especially when he uses the word simplify. And the market has taken a little bit of a dip back, and the return forecast has actually come back to approximately 13%, but those are still pretty healthy numbers. There are opportunities out there that are worthy of attention and consideration. So, I don't know, is this one of your quotes that's underlined in the book, Matt?
Probably. You can take any random amount of words in there. It's probably underlined. Top 100 for sure.
Mark, can you give us a page reference for this particular quote?
No, I can't.
No? Okay.
Because I'm as bad as you guys. I highlight and I don't actually write down where they're from, and the book is full of those type of moments. So I look forward to that discussion.
I think this is especially valuable for clubs, and maybe those last 5 words are so important that you hear in these stock reports that people give in club meetings a lot of time that they have had a very difficult time in cutting away the clutter while focusing on what's really important about the company itself. If you could stay focused just on a few basic ideas, you don't have to go into huge, great detail in order to get a pretty good understanding of what's happening in the company. So much is white noise, is the way I refer to it. So much of it is clutter when you're finally finished with the analysis. I like the hamster wheel idea too.
Here you go, guys. Page 61.
There you go.
In part 2, blind spots, chapter 6, it's the simple life for me. Yes, indeed, it is a highlight of mine.
Yeah, and I think you're right, Ken. I think probably the greatest gift, and you've said this many times, that George Nicholson, one of the founders of the modern investment club movement, gave us was this reminder that you really only have to focus in on a few key things. And everybody out there knows that with all the information overload and chaos on the internet, you can find an awful lot of information. And what we discovered during our studies is you really have to just be laser focused on a couple things, and the characteristics and things that will impact those 3 most important parameters. So it really does cut out the clutter.
I know we're not discussing it, but while I do have this one underlined, I also have underlined something that's in italics in Tillinghast's book, and he gives us a test for noise. And he just says, ask whether a piece of information will be useful in a year or 2, leaving us plenty of fussy details about quarterly results that we can kind of ignore. Whether or not a piece of information will still be useful in a year or 2. I think that's profound, as profound as this quote that we have up here at the moment.
Totally agree, Ken. I was just going to add on to that too. One of the themes that really struck me from Joel's book is, and Mark had the baby with the face there, right? Investing is not speculation, and Joel says anytime you have a time frame to your investment, you are speculating, right? You're expecting something to happen at a time. To Joel, true investment is an indefinite time, and that really affects how he views, and he actually uses upside and downside, but the possibilities of what could happen. And it reminds me of Warren Buffett's quote, our favorite holding time is forever.
And Matt, that's so important for a club to remember, that they need to enter every single meeting with the idea that they have forever to hold their investments. They're not individuals, it's a group, and it's a should be an evolving, changing group over long periods of time. As individuals, we might change our philosophies as we age, but a club should always be investing as if they're youngsters and investing for that 5-year future and trying to cut out the clutter on the way to doing that.
Yeah, and in fact, I've already mentioned this one other time. It obviously left a mark on me, but I will never, ever forget Cy Lynch and his selection of Five Below in March or April of 2020, because every single one of us, I don't think I was the only one, almost screamed back at him, but the stores are all closed. And his answer to that was, yeah, that's today. But they're gonna be back, and you guys, this is a really good price, and it's just a great, that's the way you look at those momentary challenges.
And knowing Cy, somewhere in that answer probably was the word patience.
Good stuff. All right, and again, you can get all hung up in the math. We like this picture because that blue line is real. That's just simply a regression through the index prices thanks to the value line arithmetic average. And the simple thing is we're under that blue line. So there are probably a few more stocks that are more on sale than they used to be. It's just a matter of getting out there and finding them.
Yeah, that light green bar on the graph only represents a couple days of trading now. We're into the new quarter. And so that light green bar is representing just a few days. And that dark green bar did actually look like it touched the line of reasonable expectations. Mark, did it touch it, you think, or come darn close to it?
It got above it in February.
Okay.
Until February was done wrecking it.
But I mean, the final set of numbers came darn close to touching that line. So
yeah, closer than I thought it would. End of March. All right, here's your groundhog update just real quickly. The top 40, there's 176 entries this time around. Again, for those of you that may not be familiar with this, we basically take and invest $1 million artificial groundhog dollars per contestant in 5 to 20, a minimum of 5, a maximum of 20 positions on Groundhog Day. And we've been doing it now for 16, 17 years. Yes, it is 17. This is our 17th year. And then we simply let those simmer for a year and see where it ends up. And we reach out to investment clubs for group entries, individuals, and then we have some celebrities. The celebrities are in italics. The investment clubs are bold. And the individual entries are just ordinary text. And you can see that numbers 9 and 10 are right here. So we're happy with that. And Ken, I'm happy to see that the Cowtown Investment Club out of Fort Worth is back.
Mark, I haven't had the internet consistently where I am for my travels this week, and I've been playing with a lot of the presentations that we've made in Bull Session because I have them just on my hard drive.
Right.
And I've been extremely interested in what percent of the top 40 belongs in club names. And we're at a high right now, at least for the last couple of years, with 20% sitting in club names, 20% of the top 40, 8 of the names being clubs. I think that is telling us that maybe these clubs that are getting involved in these kind of activities, maybe that's beginning to give them a little bit of a tip-off as to what they should be doing for a portfolio over time.
Yeah, and you may recall last year we had about 8 of them all grouped right around 20. And I think that's a perfect lead into Annie Duke's book where she talks about, what's the phrase she uses? She doesn't say the word investment club. What's her?
A decision pod.
Decision pod.
Group.
I like that. Decision pods. I can probably work with alien invasions on that one or something. But anyhow, an investment club is leading the way right now. It's a previous champion, the Orange County Model Club, out of Orange County, California. So good stuff. Ken, I know you've been calm and really relaxed on the subject. The monkey is 141st.
I'm very glad to hear that, Mark. Okay.
The dart tossing monkey is down the chart. The other thing that is notable, well, there's a couple things. First of all, that's the lowest number of participants beating the Wilshire 5000 in the history in 17 years. So I expect that to change.
A long time before the end of the whole thing here. I
Yep.
just want to get mine off of a 5 handle and up into a 2 or 3 handle. I'll be pleased then. So
All right,
do
and the
something
value line
for me.
arithmetic average is at 76th. That's also extremely rare. And it just continues to underscore. I don't know if you've caught the recent headlines about 10 stocks accounting for like 80% of the gain so far this year. The companies outside the 10 are not having such a good year. That is evident by the value line arithmetic average. And that's about as big a difference between the Wilshire 5000 at 23 and the value line arithmetic average at 76 that I can remember. So that just simply says there's got to be some medium and smaller, faster growing companies opportunities out there.
I think there are, Mark, and it's not nearly. I don't know. I'm just getting the feeling as I'm looking for stocks this month in April that it's not nearly as difficult for me to find candidates as it was perhaps in December or January. I'm finding things in areas that I don't even normally look in. So I think that if you're bound and determined to buy some stocks on a regular basis, don't give up the ship. Keep putting names on your lists and then keep moving through those lists looking for the perfect investment. And remember, even if it doesn't have all of the things that you want in an investment, it still might be something that you can hold for 4 or 5 years until you find something better.
Absolutely. Here's our reminder. Next Tuesday, we'll cover these two books during the session. Joel Tillinghast, we'll talk about Joel here in a second, and Annie Duke's Thinking in Bets. I'm just starting that one. So just as a reminder, Joel Tillinghast has been the manager of the Fidelity Low-Priced Stock Mutual Fund since its inception. So he goes all the way back to Christmas time 1989. If you want to date stamp that, that's back right when Ronald Reagan had left and the senior Bush was president. I mean, that's quite a while ago. And he has been in that position ever since then. And I kind of like this chart from Morningstar. It shows some of the people that they have been bringing along at the fund because Mr. Tillinghast is going to ride off into the sunset later this year. He's going to retire during 2023. And obviously there have been some people there for 5 or 6 years, basically lining up to take over when that happens. The track record's on the right. I think it speaks for itself. He's had a couple of more challenging years here in the last couple, kind of flattened out and didn't do quite as well relative to the stock market. But when you take a look at the performance over time, that is a relative return of 5.7%. That's pretty powerful stuff. Ken, do you own any mutual funds these days?
Mark, I only own 2 international funds right now, and sometime during this year I'll be selling those out as well. I have moved into a couple of exchange-traded funds, but I just don't like the way that mutual funds handle taxes for me personally. They do all kinds of behaviors and then don't tell me until the end of November, sometimes even the first or second week in December, about what my capital gains distributions are going to be, and it plays havoc with my taxes some years. So I've decided to move from, and I did originally own 4 or 5 mutual funds. I've decided to move entirely out of mutual funds, and I'm going to move into a few exchange traded funds, and they'll be there basically for me to park money in when I'm waiting for something to happen. I know that CDs are becoming more and more attractive in this interest rate environment and everything, and even just regular accounts that you're holding at a broker are becoming more desirable. But I just think that parking money in a good, solid, strong index fund is the best way, especially if you'd like to have something that you don't mind getting out of in a particular time period if you need cash. It's easily liquid, just like cash, and I think it has the potential to grow much better than cash. So that's my strategy at the moment. I've put this one on my list to take a look at. To be honest, it's not one of the ones I've ever really examined, Mark.
Yeah, I think it's an interesting. I agree with you 100%. I don't own any traditional mutual funds outside of a qualified account. Our IRAs have a few mutual funds in them. We like Jensen, the high quality Jensen fund, um, but just a couple other funds like that. But one of our favorite things to do here at Manifest Investing, many of you have seen us demonstrate this in classes, is to use a successful fund like this one for discovery. And here's an example. This is actually the top 25 holdings of the fund. That, by the way, that third one down is cash. So he actually has more cash than has been typical for this fund.
You know, Mark, there it goes. Okay.
Did we switch to it?
It's there now. It wasn't there while you were talking, but it's there now. You're fine.
Yeah, the hot spot's a few seconds behind, I think.
Yep. The Ken, not so hot spot. Yeah, that third line, I just blanked it out. It's basically cash. So you can see it's approximately 4% because it's up there at the top of the list. Again, a little bit more than usual, but gives you a feel for some of the type of companies in here. There are some very popular investment club, modern investment club names in here. Amgen, AutoZone, United Health, Ross Stores has been a good study over the years. Walgreens is there. Just a whole bunch of names, and then there were actually three that I was not familiar with. So I grabbed their description. That Next PLC is that NXGPF that you see here, and it happens to be a British apparel or footwear company. And for what it's worth, I mean, there does seem to be a fair amount of shopping going on around the globe. This one here could be interesting with what's going on with Saudi Arabia deciding to allow less oil out the door. Who knows what that will portend for companies in the Montana and in Texas areas. But I mean, this one is one that I have actually, in fact, I'm pretty sure there's a groundhog that has Cord Energy in their portfolio. So we'll try to fill that one out. And then this is a company that I am more familiar with. I didn't know that we didn't cover it, but there's the ticker symbol down at the bottom. Matt, is this one anything you've had to deal with over your career?
I'm not directly. Certainly, everyone knows Hanhai if you say Foxconn.
Right.
But no, I've not looked to invest in them or had to deal with them. We dealt with a number of electronics contract manufacturers, but not them.
Okay.
Mark, is this Chinese or is it Taiwanese or is it some other Eastern Asian company, ADR?
I don't know if it's a blend. It's certainly a dominant Chinese, unless Matt knows anything differently.
Yeah, Foxconn is based in Taiwan. It's a Taiwanese company, but certainly the Apple plants and things like that are based in mainland China.
Okay, so that's that list. And then here's another list that I grabbed off of YCharts, just looking for the companies that seem to be attracting attention within the last quarter. It'd be the last quarter of 2022, actually. And again, there's some interesting names on there that I am not familiar with. Might take a little bit closer look at. And then there are a few, Regeneron makes that list. That's one that we've talked about having Hugh give us an update on. Centene was a stock to study not that long ago. Gilead, again, company that Hugh has mentioned. Amgen, I'm pretty sure Hugh has owned Amgen since the 1980s. And he accumulates it all the time. Look at Aflac down here. So I guess, Ken, what I find interesting about this fund is it goes across. It does all of the above investing. What it comes down to.
What strikes me, Mark, are the extreme number just on this portion of the list of very, very tiny holdings in the top 25. They must have well over 100 holdings to end up with this many less than 1% holdings on this top 25 list.
Yeah, they have 869, which is a management challenge.
Whoa.
And he talks about it in the book of having positions in small positions in companies just so they're tracked by the team.
Okay, that makes sense. All right.
I know Tom O'Hare used to do that.
1.2, just to talk about his longevity, and I wanted to have it last slide, but I was looking it up. Low price stocks turnover is 14% a year.
Yes.
So that many companies, but they still hold, an average holding time would be 7 years.
I'm actually curious, Mark, if you go back to your annual return, it was like 12%
Mm-hmm.
Is that also including the fee?
Well, it would be the value. It would be the value. It would include the fee. I'm not sure what the actual management fee is.
0.82% for the expense ratio. So I was just curious if that included that.
Yeah, that's in there. That
is what Morningstar reports as a lifetime return. So they do include that.
Mm-hmm.
Yeah. Mark, does this mutual fund charge a fee, or is it just a listed expense ratio?
It's an expense ratio. Yeah, there's no.
Okay, so it's not an additional fee on top of something. Okay.
Right.
Correct. Yeah.
It is a little. It's certainly higher than index fund. It is 0.82% currently.
Which isn't too bad in the relative scheme of things. I think you can find a number of similar funds that would be anywhere from 1.2 to 1.6 for their expense ratio. Not saying I like it. I'm just saying that's what it is. Okay, so some interesting stuff there. I would be tempted to look at companies like Elevance Health and a couple others just to see, what do they see. All right, the second half or actually in tandem with the Tillinghast review, we're going to talk about Annie a little bit. And many of you may know Annie from her moments on ESPN. And she is a renowned poker player. I think they call her the Duchess of poker. And couldn't resist that quote down there either. That's right in with your pods.
Yep. Yeah. I have this. I'm imagining the left-hand picture of both of them, but really left-hand pictures. Annie at her investment club meeting, handing out bricks.
This confirmation of previous belief is something that I really would like to discuss in the next couple of weeks. I think we get into it in certain ways in Tillinghast's book, and I'm seeing it. I haven't read that much of Annie's book yet, but if she's also coming at that direction, I think that's an important thing for us to consider sometimes when we're in especially stable groups that have a long history. Those groups the surviving members of those groups tend many times to end up thinking very similar in the way they do business, whatever the business happens to be.
Yeah, I don't have the exact words I want to have, but I really want to challenge, because it's not just to have an investment club, but it's the right behaviors of an investment club. And I really want to find some way to challenge people and say, when was the last time you had a non-unanimous vote in your investment club? And I don't want that to skew as, we go for squirrely things or things that are more controversial, but just to bring up sort of multiple viewpoints.
Well, and I'll double down on that, Matt, by saying, in my mind, when you have a vote in a club and it's not unanimous, I think that's a symbol of a healthy club rather than of a club that's in disarray.
Oh, exactly. If it wasn't clear, that's exactly what I'm seeking. If it's unanimous, you probably haven't explored it enough.
I don't think that you should be searching for split votes 3 or 4 times a meeting, and I do think that it's very useful many times to seek consensus, but there are times when a split vote tells you that maybe you're headed in the wrong direction and you should at least take some time to think about where you're headed before you go there.
Yep, and that's definitely a behavior too, and used the exact right word is consensus, right? So we
Yeah.
have rules to establish, and you're all participating, and the idea that differences can be tolerated and you can move on, whether
Yeah.
it's something to revisit, you know, as new developments happen. But if you move to a different company, a different industry study, whatever it is, the next line of business, you're still friends. You're still friendly, and you sort of start from ground zero to talk about the next thing. Don't hold a grudge. Don't take anything personally.
Absolutely.
You guys may remember that I worked with that author on from Smart Money that actually did the research into investment clubs and some of the decision matrices that she ran into. And in fact, it's actually a bit of folklore to say that all women investment clubs are winning the long-term battle, because what she really found, and we don't talk about it very much, was that the mixed clubs, the mixed gender clubs, tended to perform better in general. And she posited that some of that is just simply drawing from different biases. Maybe that's something we'll talk about next week.
Well, I hope this, what I'm going to say, doesn't offend any of our audience, but I also think, Mark, that many times women members of clubs are trained to be quiet. And I think if you can get to a place in a club situation where the women are speaking as often as the men are speaking, and as passionately sometimes as the men are speaking, I think you have a really healthy club when you can see that happening.
Mhm.
And I agree with you that a mixed club offers the best of all the worlds, and should be seriously considered by the groups that you know, are terminally all male or terminally all female.
Right. Well, I know for a fact that one of the members of our club that was quiet, quiet as a church mouse, if she did say something, you knew it was pretty damn important.
But
So,
I'm
I mean,
married to one of those.
that's like many things in life. I mean,
Yeah.
Lisa has an opinion here. We better listen to her.
Yeah.
Cool. All right. So Matt wanted to give us a teaser for some of the stuff that we will talk about. He has actually put together a presentation that he's crafting into again almost a club. I want to say almost a club psychology piece. But go ahead, Matt. What's on your
Yep,
mind?
yep. My subtitle is the behavioral argument for belonging to an investment club.
Cool.
So and understand too, I don't think you mentioned that before too, right? So Annie Duke was in all but name a PhD psychologist. She took a leave of absence while she was working on her doctoral dissertation, and it ended up in Montana, and started playing poker seriously in a basement poker room. So she's a trained psychologist who's observed this group of people making serious decisions on a fast pace for a couple decades. But the premise of the book is we have with us a passenger that is built to help us a lot, and does help us a lot, but runs into some issues when we're thinking in statistical terms, so over large data sets and over long periods of time. And you might call that your intuition, your subconscious. But Daniel Kahneman, who won a Nobel in economics with Amos Tversky, calls it System 1. And some of you may have done something like this, and it won't spoil it to do it over. Believe it or not, you can be fully aware of what's coming up, and you'll still stumble into it. And we won't go to it yet, but the next page has an exercise for everyone to do. I encourage my fellow presenters to mute themselves, because I will say, if you only read the information on the following page, it won't work. What you're looking to do to follow these instructions exactly is to read and speak aloud these 2 steps going through. And what you'll find is part of it is probably pretty smooth and part of it probably will be pretty rough. And it's that interference which I hope alerts you to the fact that there's another, I won't say another force, I want to be mystical, but there's sort of another piece of you that exists that you need to deal with, to cooperate, to be at your best, whether it's investing or many other things. So let's go to the next page. The instructions are also on this page. Oop.
How about another part of your brain, Matt? Okay.
There you go, another part of your brain. So go ahead. I'll give people 90 seconds to walk through, and remember, it's 2 times through the column, step 1 and step 2. All right, I'll stop at 60. So I hope everyone's had a chance to do that, certainly at least to go through step 1. Now understand, this is pretty innocuous, right? I mean, the terms left and right and upper and lower are not controversial, but this technique or techniques not too far from this can actually delve into your subconscious presets, biases, into some pretty deep thinking things. You can get into your thoughts on race, on gender roles, on politics. So your system 1 is thinking very deeply about all the things that your conscious self, your system 2, is worried about as well. Let's go to the next page. So in your brain is an odd couple. And then Kahneman's book, Thinking Fast and Slow, dives very deeply into this, not just about the economic terms, which was his focus, and certainly our focus talking about it, but many other things, right? So system 1 is very fast. And another way to think of it is as a filter, right? And your system 2 is a deliberative mind with a certain capacity. It's very easy to, and I'm sure everyone's thought of times where you're overwhelmed. You can't take any more. There's too much input. Your system 1 is specifically a filter to try and figure out what needs system 2's attention. But as it builds habits, some of those things may not be entirely productive that you go through. So system 2 is autonomous. It's also gullible. If it hears a fact on the background on TV or casually reads it on a billboard or on the paper, it might take that for a fact and not remember what the source was, right? We've all heard certain things thrown out, and people would ask, well, where did you hear that? And you'll say, well, I don't remember. Or you say, everyone says that. Certainly some people do. But its strengths are it's an associative machine, so it can bring distant thoughts together, but then the downside is it's also a machine, you can call it, for jumping to conclusions. And those conclusions have to be challenged at times. Another word might be instinct. System 2, you're deliberative. It takes effort. You can feel tired if you use it too much. And that's actually proven experimentally, that if people are overloaded with non-related tasks and then given the task to make decisions, they make worse decisions. Their cognition sort of fails. It's lazy. It doesn't want to work. It's happy to have system 1 handle everything that system 1 wants to handle. And it's also what you might think of as I, right? What you direct, what you do is your conscious self. There's a whole bunch working around you. think was that the last page for this? Oh no, that's another one. So next page. So this is some of the upside or some of the downsides, right? System one, and we'll talk more next week about why System one is there and what it's there for. But there's a large body of psychological work and a lot of experiments, a lot of experimental evidence that talks about biases that we have. And, these are names for certain behaviors. So there isn't a overall nomenclature, but there's a number of these that people know about, that you've probably heard about. I'll focus on, and Annie focuses on, both motivated reasoning and self-serving bias. So the idea that, I'll say in our culture, good things that happen to me are the responsibility or are due to my skill or due to my actions, and bad things that happen to me are due to bad luck or others' actions. In collective cultures, believe it or not, it is exactly opposite. And that's something actually I'm poking at. I even asked Annie a question, but I don't know if she'll answer me or not. So don't take this as an exhaustive list. Certainly a lot of people have talked about anchoring bias, hindsight bias. Those are sort of broad terms that people understand what goes on. But it's these things we have to deal with when we're trying to make a decision, such as to buy or sell a stock, to be aware of them, first of all, and then two, to try and counteract the ways, what Dan Ariely calls predictably irrational ways, that they send us off from what would be, let's say, you can't say it's the right calculation, because it's not as easy a calculation, but let's say a rational judgment.
Fascinating, Matt. I found myself, maybe there's a word for this. As I was going through the exercise, my brain is constantly thinking, what does he want me to say, or what's that right answer? And I'm sure there's that's covered by something here, but it's like to the point of distraction. I'm trying to figure out, well, what's the right answer here,
And you can go back again. You've all known this, so you're not spoiled for the presentation next week. It is a little bit different to go through, but you can go back fully knowing now that we've talked about, and you will still stumble on those words when the meanings and what you see on the page change. You can do that. Also, very famous is to do that in colors, right? To have the word red but printed in blue ink,
right,
or blue pixels, will send you off the same way. So it's a very basic thing to be aware of, and the awareness is what is experimentally tested is how slow it takes to process one column versus the other. When there's no conflict, it's simple. It's simple enough that System 1 is handling it. When it slows you down, or when you make mistakes and have to go back, that is System 1 and System 2 struggling with each other. And that's the awareness to have. But again, even very deep concepts can be triggered by the same sort of similar setups with two different senses.
Matt, I was doing things like this back in the 70s in graduate school when I was taking a class called Designing Tests, or something similar to that. And it's very interesting that Mark brings up the idea of what does he want me to say, because one of the takeaways from a class like that was when you design a test, you're using a number of different facilities in your mind, a number of different places in your mind, and each question doesn't necessarily elicit a response from the same place. Column 1, column 2 made that very clear, but it's also important when you're designing questions to test mastery that you convey as much as you can what you do want the responder to answer, because if you're unclear as to what you want in an answer, then that becomes very unclear to the responder, and especially after it's graded, you get to the place where you have many times complete confusion as to what the teacher and or the student is trying to accomplish for a particular exercise. So this is not new at all, but it is new to me in applying it to decisions being made in a club. I think that
that's
I'm
great.
looking forward to this all the way.
Good stuff. Thanks, Matt.
Mhm.
All right, I thought we'd close just by pointing out that we have reached the end of another month, actually another quarter, and these are monthly dots for Tin Cup. Again, Tin Cup is our demonstration of the what if question to back in 1994, 1995, what if an individual had invested the maximum amount into a 401k per month, and over that time, basically build up this portfolio. You can see it actually reached over 4 million during the bubble, and it's percolating around 3.5, but it is pretty much in track with that same type of a reasonable expectation line. And yeah, I was skeptical about this the entire time it was happening. And if I had a time machine, I could have sold and come back later, but I don't have a time machine that works for that. So we basically are back at that level. Here is the portfolio itself. Just wanted to take and reinforce one of those things that we do to avoid some of the biases that Matt was talking about. Is we basically take the portfolio dashboard and use it as a decision matrix. And we do this for many of the investment clubs that we are affiliated with, where we'll take the current active portfolio and sort it by the return forecast, from highest return forecast to lowest. So you can see that the ones that have the highest outlook for return forecast are up at the top. Now, Generac was a selection that we made a little bit over a year ago, following the meeting with the roundtable session with the St. Louis chapter. And I think we were right. We were just not at the right time. And that's my story, and I'm sticking to it, Ken. So we basically did take a position in Generac. It's not gone well. We'll show a little bit more detail about that. But in terms of thinking about what we might add in this particular portfolio, I mean, Service First would be a pretty good candidate also. British American Tobacco is just kind of an anchor there. It has a fairly low growth rate, but it actually has done okay. And Taiwan Semi was the company that Cy brought to the roundtable last week. But I would be inclined to just we're only going to put another 2,500 in. The dividends are already in there. So 2,500 means we have about $6,000 to invest. So it's no big deal. And we'd probably just sprinkle it into Generac based on this. What I basically see with Generac is a company that has been, if you're not familiar with the company, they make mostly emergency generators for commercial businesses, industrial businesses, and in some cases, residences. And on a day like this, when I look out and I see lightning flashes and gray skies, this is a Generac day in the Midwest, at least in Michigan.
I think it also demonstrates, Mark, that there's also room for debate when you use a dashboard like this, because my eyes immediately fell to Service First, and with a small amount of money going in, it was a small bet on the banks turning themselves around a little bit, and that's where my eye fell for investment, especially with that 15% growth number right there. Mark, I have a request from two different clubs in this era of increasing or static static interest rates at a much higher rate than we're used to for the last 10, 12 years. Is it possible to get Kurt to allow us to choose our par value for our cash?
Could possibly do that. It's actually driven by a published figure now. So that is the national average or median or some type of a figure.
Let me give you just a tiny bit of rationale. I visited a club last week before I left that had their cash sitting in a money market, and the money market was returning to them almost 4%. And I was just, first of all, I was a little bit flabbergasted that they had found this way to put, to store some cash at a much higher rate. But then I was a little bit distressed that it's not being reflected on the dashboard. If they had told me they had found, 0.7, I wouldn't worry about it too much. But when they have found 4% plus, I begin to think that that will impact the dashboard, especially as some clubs tend to hold much more cash than just 0.1%.
Yeah, it's something I have thought about quite often. In fact, Matt posted something the other day which showed that the Wells Fargo's and Bank of America's are still at 0.1, yet
Yep.
there's a whole bunch of banks at between 4 and 5, by the way.
Yeah. So I just would like to, if it's user change, then I think that if the users choose to keep it at 0.5, that's great. And if they, we can always publish what the average return price is, the average yield is, and let them make some choices. I just think it makes the dashboard stronger. That's all.
Yep. So it's basically a toggle to some kind of an override.
Yes. Uh-huh.
Okay. I can review that with him. That sounds like it might be up his alley. It fits right with some of the other stuff that we're looking at in the development queue anyhow.
And we have a hand up in the air from Ann Manning, and we always take Ann's hand. So Ann,
Always.
go ahead.
Yeah, sure, right. Okay. I just have a question.
Sure.
In March, I thought you said you were going to buy more of Generac for the 10 cup, and I never did see it increase. So are you saying that you're taking that money plus more money to buy Generac, or is this just the March thing you haven't done?
Oh, I thought we did. Did I? I may have made a mistake here, but I'm pretty sure we accumulated Generac within the last 2 months for sure. I'd have to go back and look. But what we are doing, this is for the current cash on hand, which is only $6,300.
Yeah, because back in in like January and February, you had 2150 shares. So that's the reason I'm asking, because I thought, well, you were going to buy more, but then the shares didn't go up.
Okay, I'll go back and look. It may have been just something we were thinking about doing, but I'll go back and clarify that.
Okay, thanks.
I could have sworn we
Thanks,
did.
Ann.
All right,
Thank you.
so here's a look at the company. Again, pretty. It's going to have some cycles, some fluctuations over time, but I think you can make an argument for the low teens for a growth rates. That's our number one consideration, and we certainly see that here. And that's basically the slope of this trend line that you see right here. And the net margin has been fairly consistent. It has been reduced in the current version of Value Line, and Value Line actually has a PE ratio of about 26, and this has been conditioned down based on other analyst expectations and some of the stuff that we look at. We'll look at a PE chart on the next page, but you can see that there was quite a bit of exuberance here. And the one thing I would draw everybody's attention to, again, these are decent numbers. A projected return in the 20s, the projected return on value, which does not include any PE influence, is at 20. But the thing I point out here is look at how much Value Line has retreated from their 2026 expectations in their most recent update when you actually can first see the 2027 expectations. So you can see they've actually retreated a little bit. Here's a look at some of the internals.
Yeah, that 16 PE mark is not a high or a low. It's a projected average PE, right?
Right. And when you look at the long-term PE ratios, you can see that there was, a fairly decent amount of time in here during a little bit slower economy when they were in that range. They obviously bubbled up with what was going on here. And you can see Value Line is still hanging around up there. I think that's a little bit exuberant. That's just my opinion. Because, again, I don't see the profit margins topping these levels, for one thing. And the profit margins have actually been fairly steady. And they are pretty much through the legal challenge that they had with, one of their service firms going out of business and going bankrupt and suing people and all that kind of stuff. But you can see that the price is down pretty close to its 52-week low, within 13% of it. Again, their debt is normal, fairly average. Morningstar says they're on sale by 20%. The analyst consensus, which is also actually sagged back, declined a little bit. is also a little bit to the good side. The relative strength index around 30, so I'm fairly comfortable with just sprinkling a little more at it. I think the thing that you're dealing with here, and where we probably made our mistake, is we went into this back a year ago, somewhere around here, thinking that it couldn't fall much further. And it'd been red hot. I mean, look at this. Been red hot for a long time. We know that the companies can do that for a long time, but notice that the wheels basically came off for the better part of a year. The other thing that I notice when I'm looking at a company like this is this has happened before. You had this type of a situation, you got up here, came all the way back down here. So there is some precedent for this. If the core business stays intact, could be all right. You can see we are basically at similar levels to what we saw back here. But I think the main thing is look at all these black or grayish bars in this time frame when it was red hot. Notice all the red or pink. I think maybe you can make at least I'll use the word instinct, Matt, and really trip over my tongue. My instinct is that those people that finally got out, because there's a whole lot of people that had some tremendous gains here, and many of them were selling on the way down. Maybe you can make a case for much of that has taken place. Those that want to take their profits and get out, basically holding the price down or pushing it down even further, could be at a good place technically also. So we'll go with that. It's a pretty good looking company. All right. Here's your reminder that we do have these sessions, bull sessions and roundtables are archived on YouTube. If you just go to youtube.com, search for Manifest Investing, you'll find it. Here's the number we told you. We were just too short of 1,000, and 1,000 is a trigger point for some other stuff. I will continue to point out that 27 minutes into this one, there's an excellent discussion between Matt Spielman and Ross Meredith on Silicon Valley Bank. And many people have written to me expressing gratitude for having that pointed out. And anything else you want to add to that, Ken?
No.
My audio is still here this week, so hopefully we won't have any repeat issues. We posted this up here without audio, and that was my fault. Problem on the road. Can't imagine what caused it. Maybe Sean will figure it out for me. But the one that is there now does have audio.
Great.
And with
Mark,
that was the view from my office last week.
the roundtable is up and viewable now from last week. Is that correct?
That's correct.
Okay, great.
Now I'll double check that link on the page, but I think I remembered to change that. All right, so again, tune in next Tuesday. We'll take a look at Annie and Joel's work, have a little bit of a group discussion. Ken and I will put together some of our favorite moments, and Matt will walk us through more that we've learned from those two books. Anything else you want to add, gentlemen?
No, sounds really good, Mark.
Always a pleasure.
Travel safely.
Good night, all.
Okay. Good luck out there, everybody. Take care.